Well, Office Space Solutions is a stock on our radar. The company posted a strong performance actually in Q1, strong revenue growth, improvement in margins. Let's talk in detail about the quarter gone by and the way ahead. Mr. Amit Ramani, the chairman and MD, joins us on the show. Hi, Amit. Good morning. You're walking the talk. Solid set of numbers. Give us a few details. What was the seat addition in the past quarter? Could you tell us for the year as well? What is it looking like? And how much of it, in the past quarter was via managed aggregation?
So, Nigel, the seat addition has been fairly strong. We today sit at about 232 centers. 155,000 seats is the total. And we have another LOI signed of another 10,000 seats, which takes it to about 165,000 seats and roughly about 13 additional centers. So 246 total centers is what we are targeting. The seat addition for this year, same as last year, we are targeting about 40,000 seats to be added. This year, we have clear visibility of about 30,000 right now, and another 10,000 we will add over the next 8 odd months.
Okay, all right. So by the end of this year, we'll be around 200,000.
No, so by the end of this year, we'll be 175,000.
175
at 135.
All right. So you've added already 15. Got it.
The ratio remains the same, which is 65-35 split. So 65% is managed aggregation, 35% is straight lease.
Okay. Mr. Ramani, so, can you tell us how the year is looking in terms of overall EBITDA margins, etc.? Are there any renewals coming up where you would hope to renegotiate those leases higher? And just give us an update on the GCC side of the portfolio as well.
So I think EBITDA improvement, as we had given the guidance earlier as well, I think will remain almost along similar lines. So if I look at the current quarter, we were at about 37%. So I think it would stay in that range for the remainder of the year. In terms of the GCC portfolio, the mid-tier GCCs, which is the first-time entrants, I think has seen a large growth out of the 50-odd GCCs that came to India over the last, I would say, 9 odd months. About 9 are with us. So I think a very, very strong part of our portfolio. These companies include Meltwater, ABC Fitness. So I think we feel that that is certainly an area where we see a great potential and large growth. If you look at last 20 years, there were some 1,500 odd GCCs. In the last almost 12 months itself, there's 200 plus GCCs that have been added. And I think the prediction is very strong to be about 2,600 GCCs in the next 4 years. And we obviously want to play a big part in that growth journey.
Amit, hi, morning. But the larger companies, American multinationals, etc., who come and set up their captives here, I mean, they typically they'd want their own infrastructure. I mean, entire facility sort of leased out, kind of model. That's what we've heard from consultants, etc. We've spoken on this.
Right.
Or is it
that are already established in the country or already have a presence, they would like to do their own, obviously, leasing. But from our standpoint, as you are aware, we do a design build service, which is a fit out service. So they clearly engage us for those kinds of services. And that's already happening with a couple of our clients where they have done the lease, but we are doing the design and the build service for them. So clearly, I think we play a role there as well.
So you will, I mean, you do the fit out, etc., design, fit out, etc., and then you do the maintenance as well.
No, in many cases, they essentially hire us for doing the design and build. We do the build out and then we basically walk away. They do their own maintenance.
So it's like that would be like a one-time revenue stream in that situation, right?
That is true.
I just had one more question. Your business, I'm assuming, office space is linked to the economy, right? I mean, and whether the economy is the margin, it's all relative, of course. I mean, slows, picks up pace, etc. Over the time that you've operated the business, how sensitive is your business, the office business, to this? Because there seems to be a little downward pressure, not just here in India in terms of growth, but globally as well. How sensitive is it? Or you think the more important trend is, cost efficiency, cost savings, which corporates are looking for, and that move will more than offset any growth slowdown?
So if you look at the industry, in 2020, March of 2020, this industry was about sub 20 million square feet. Today, we are touching almost 80 million square feet. And the projection is in the next couple of years, we should cross 100 plus million square feet, right? The industry is growing at about 20% CAGR. It's almost 20% of the total commercial leasing. 80 million square feet was the total leasing last year. 16 million was flex, as we saw. So I think very, very strong trends, and I think it's a behavioral change that has happened. I think corporates, the large corporates look at it for flexibility and speed, and obviously distributed work where they want to set up maybe, sub 500 seater centers. But the mid-tier and obviously the SMEs for sub 250 seats, I think this is a behavioral shift, and this will continue, I think, for the long term.
Sure. Mr. Ramani, just to go back to that point, like you were explaining to us that you do provide these fit-out solutions for large GCCs, and that becomes a revenue stream in itself. Like that, you have a lot of other allied services as well. I think you're looking at cafeteria management, there's mobility. So give us a view on all of that. How much do they contribute to your overall revenue today? And where will that number be, say, a year or two down the line?
So last year, this contributed roughly about 11% of our coworking revenue, right? Because that's where this service is part of. So which was roughly about 100 odd crores out of the total 1,200. This year, the target is to be about 155 crores, which would be roughly about 15% of the coworking revenue. And we feel that this area has tremendous growth. We would like to make it grow, obviously, closer to about 20% over the next 2 to 3 years. And clearly, I think the offerings that we have added, which is food and beverage cafeteria management, which we do for third-party independent, the mobility solutions, which is day passes and virtual offices, and in addition, our office tech labs. And also, we are launching our furniture business as well this year. So I think all of this will start contributing a decent part of our overall revenue. As I said, roughly the target this year is to be about 15%.
Okay, and total revenue CAGR with all of this kicking in, I mean, the first quarter you've done really well, 30% growth. So just a CAGR over the next, say, 2-3 years, top line, what would it be?
I wouldn't comment on 2-3 years, but clearly the guidance for this year is we will do about 30-odd%, and I think we are well on track for that.
Okay. All right, we'll leave it on that note. Thank you very much for joining in, and good luck for the rest of the year.
Thank you,
That's Office, and everybody is going to Office, and it seems their business is doing well.
You have now, in quick order, you have 3-4 listed businesses in this space, right? Smart Office is one. There's Office, of course, the older one. There's one more, which just came to the market, right? So I think at least 3 listed
and then we have
co-working businesses.
Yeah.
And I think there is one more coming, which is, I don't remember the name, but I think there's one more in the pipeline, which is going to, and that's the largest, by the way, which is...
Are you talking about, but that's the REIT, the Knowledge Realty Trust.
No.
Okay.
The next REIT is the
Knowledge Realty Trust,
yeah,
which is the Blackstone one.
Blackstone and the...
Yeah.
I think there's another co-working sort of company coming to the market.
We'll get into it. We'll look it up.